No.
Yes.
No.
Yes.
Oh my gosh. Oh my god. This is why I'm having these conversations. Well, thank you for spending some time with me today.
Thank you.
I am, first of all, tell us who you are. Tell us a little bit about your background, why you're on the council, and then I want to hear it. Like, I want to hear like what is the stuff that you have seen come across your desk that you're just like, oh my gosh, if we could just fix this one thing, it
I
would
actually did my
change
homework.
everything.
I've got multiple pages here of
Oh
things
my god.
to go because I didn't know I'd just say like, oh, just one thing. I've got a myriad of things,
Okay.
but
All
didn't
right.
want a half
All
hour to
right.
go like 5 minutes. But
Okay.
um, so my name is
Well,
Paul.
start with telling us about you.
So I've been an accountant for 30 some odd years between corporate. That my first 10 years were in corporate in New York City. And then after 9/11, I said, I'm getting out of New York City
Oh my
and
gosh.
worked on Long Island for a little while in small businesses. And then
Uh-huh.
had an opportunity to get my own tax practice back in
Yeah.
'05. So that's where I've been pretty much for the last, what are we now, 17 years?
Wow.
Um,
You must be a heck of a lot older than you look.
I
Oh my
thank you.
gosh.
Yeah, I credit my mother for the good genes on that one.
Oh, okay, okay,
Yeah.
okay.
Well, there's no hair here, so that gives away a lot of it, and there's a lot of gray here. But if I shave this off, I will look at least 10 years younger than I am now. So, um,
Wow. Wow.
so I did
So
my own
yeah.
tax practice, bought a tax practice, and did
Uh-huh.
that for. I'm still doing it. I still have a lot of those clients from
Mhm.
2005.
Mhm.
Built up
Wow.
more, got rid of some, got new ones. But I actually went and did teaching for 10 years. I
Oh.
taught middle school math for 10 years,
Oh, wow.
and while still keeping my tax practice on the side. And recently went back to just working accounting full time.
Uh-huh.
I have a bachelor's in accounting, master's in education.
Oh my
Um,
gosh.
yeah, so I've got a lot of experience with little, big, medium, and
Yeah.
seeing a lot of it and seeing a lot of crazy stuff as well as uh,
Yeah.
knowing how it should look from the corporate end and
Mhm.
what people look for on the corporate end, as well as looking for it on the small
Yeah.
business end, the banking end, and all that. So
Uh-huh.
I've been entrenched in a lot of it, or I don't want to say I'm a jack of all trades, master of none, but I've seen more than my share of everything else. So yeah.
Yeah. Now, when you were teaching, you were only teaching math, you weren't teaching accounting as part of that?
Well, I have it. Well, my teaching degree allows me to teach anywhere from fifth grade up to 12th grade,
Uh-huh.
and the jobs to teach accounting in the high school level were
Uh-huh.
few and far between.
Oh,
So
really?
knowing, if I wanted to get a teaching job, it was going to have to be where the demand was, which was middle school and early
Got
high
it.
school.
Got it,
So
got
that
it.
was, and that's actually the stuff that I like to teach the most.
Uh-huh.
When I went through my student teaching, people would ask me, what's the difference between high school and middle school? I said,
Uh-huh.
high school, you can't get them to talk. Middle school, you can't get them to shut up.
That's about right.
So middle schoolers were way more entertaining
Yeah.
than the high school kids were.
Yeah.
I'm working
Yeah.
for a small boutique firm now
Uh-huh.
as one of their seniors, and
Oh, okay.
I'm in charge of a bunch of the juniors, which is
Uh-huh.
nice to help bring them along.
Yeah.
But all these juniors have master's degrees in accounting, and
Mm.
the lack of knowledge, the lack of everyday
Actual, yeah.
real life experience or real life
Yep.
application
Yep.
is staggering. Staggering. I can't,
Yeah.
like the other day, one of them asked me about a transaction that they were coding from, and we use NetSuite in our office.
Uh-huh. Uh-huh.
Personally, like for my private clients, I use QuickBooks Online,
Uh-huh.
but we use NetSuite in the office, and they were asking me about a transaction that, instead of rules, they call them, I don't even remember what they call them, but
Uh-huh.
essentially a rule that
Yeah.
picked up this transaction, and in the memo, it said merchant services. That's not hard to figure out because we have three clients. One of them is a gym, one of them
Uh-huh.
is a food and beverage, and one of them is
Uh-huh.
a uh, a product retail. and
Okay.
they're franchises. So there's like
Uh-huh.
35 of the gyms, 20 of the food and
Oh,
beverage,
wow.
and 25 of the product. So it's all
Oh,
the same
wow.
stuff, and you should see it
Yeah.
every day, all day.
Yeah. Yeah. Yeah.
Merchant services, is going to go to merchant fees.
Yeah.
Well, the NetSuite picked it up and wanted to code it to payroll for whatever reason. So it
What?
had it.
Okay.
So the rule sent it to Paychecks as the vendor and payroll
Oh
recording
my
fees
gosh. Uh-huh.
as the GL account.
Yeah.
And they asked me, "Is this right?" I said, "Are you kidding? Can we use a micron of common
Uh-huh.
sense when we're looking at these?"
Well, at
And
least he caught it.
but that's pet peeve number one. Like
Yeah.
everyone's trusting the rules. Everyone's trusting the bank rules, or
Yeah.
with QuickBooks, their wonderful AI that keeps getting
Yeah.
everything wrong.
Yeah.
Is you want to trust the bank rules or the AI that
Right.
Intuit has, and they're just blindly trusting it and letting everything get posted there. And
Yeah.
QBO is you got more than one transaction that looks the same, they're going to automatically create a rule.
Yeah.
And they're trusting this. And
Yeah.
I'm looking at a P&L that is completely off the wall because someone blindly trusted the bank rules, which,
Hmm.
that
Interesting. Yeah.
is, read them first.
Yeah.
You want to create a rule? Great. Turn off the auto add
Yeah.
because it'll come in green. You'll see it identified,
Yeah.
and you'll know the difference between that one and the one that Intuit hasn't figured out yet.
Yeah.
But read them.
Yeah.
Read the bank text. Read and make sure it makes sense
Right.
because I'm constantly getting P&Ls that don't make sense. You've got
Interesting.
rent missing. You've got um, insurance booked all over the place. You've
Uh-huh.
got taxes that are coming in that are federal taxes, which we all know are not deductible. They're either estimates or they're payments.
Uh-huh.
And then the state taxes are all over the place.
Yeah.
And it's just, you can't make heads or tails of it. And if I'm like getting this stuff in March,
Uh-huh. Right.
or if I'm
Yeah.
trying to, work with my juniors here to get everything ready in
Yeah.
January so we don't scramble in February and March.
Yeah.
The rule of thumb in our office is on February 1st, we're filing extensions for everyone. I'm like, why? Why bother? We don't need to.
Right.
If you get it
Right.
done and you get it done right,
Yeah.
it's not that big of a deal and takes the
I think
pressure
that's
off
a
of us
pretty
during the summer.
common, I think that's a pretty common practice is to automatically file extensions for
I
everyone.
get it because it'll
Yeah.
take the pressure off. You don't have to worry about March 15th or April 15th right
Mhm.
away. You can say,
Yep.
I got some breathing room. Okay,
Yeah.
that's fine. But
Yeah.
I don't necessarily agree with that because when you file the extension, you have to make a payment with it.
Mhm.
And
Yep.
how do you know if the payment's right? How do you know if the
Right.
client's going to make the payment? How do you
Yeah.
like it's too much. I'd rather
Yeah.
just say, you know what, let's work a little harder to get it right the first time and we don't have to worry
Mhm.
about it in April or March
Right.
or
Right.
September or October for that matter.
Right. Not to
So,
mention the fact that you're just delaying the day, right?
right.
Like you're
You're just
just
delaying the inevitable.
kicking it down the road. Yeah.
And you're also giving the client time to procrastinate. Like, oh, that now they know
Mhm.
they don't have to worry about it till September.
Yeah.
Now in September, I'm asking them something about the prior January, like not
Yes.
January of this year, January of last year.
Right.
I'm talking
Right.
18 months ago. They're not going to remember anything.
Yeah. Yeah.
So, it's yeah. Those are
Yeah.
the problem number one is
Yeah.
bank
Awesome.
feed, and problem two is automatic extensions because of whatever else is going on. But
Yeah. Yeah.
what else has come
Awesome.
across
What
my
else?
desk?
Yeah.
I
Let me
watched
have it.
the
I
I
want it
wa-
all. I want it all.
I watched your one-on-one with Andrew,
Uh-huh.
and he said the first thing he talks about is the balance sheet, and I'd
Uh-huh.
agree with him on that. That the balance
Yeah.
sheet is always, if I'm looking at it and I see negative balances in the assets and negative balances in the liabilities,
Mhm.
someone's not doing their job right.
Mhm.
So
Yep.
that's obvious, but and he also alluded to the fact that they're just not doing the bank recs. Well, if they are, they're not doing them right
Mhm.
because QuickBooks will have their own reconciliation system. NetSuite has their own
Mhm.
reconciliation. Everyone, Zero, Wave, they all have
Yep.
their own reconciliation
Yep.
system. But if you don't use it and you try to get around it I had a client who did this, and also I've seen bookkeepers do this too. Instead of doing the reconciliation when they get the bank statement, they will look at the bank feed online through their online account not through the QuickBooks account. They'll
Mhm.
look at on one side of the screen, they'll have their online banking. On the other side of the
Mhm.
screen, they have QuickBooks
Mhm.
because they're not linked for whatever ridiculous reason that would be.
Yeah. Yeah.
So they see a transaction come in the bank that day, they go into the register and click the check mark box to get it to R.
Oh, no.
Yes.
No.
Yes.
Oh my gosh.
And if you're talking about
Oh my
an item
gosh.
that's already like, God forbid someone actually did a reconciliation, now you're going to throw off all your beginning balances.
Oh my
You're going to have
gosh.
all those, like in the reconciliation history,
Yeah.
you're going to have all those columns that have differences that are not supposed to have differences.
Oh,
Yeah.
oh my god. This is why I'm having these conversations. Like if you watched the interview with Andrew, you saw that at first I didn't believe him, right? So I was like,
No,
"Oh,
as I
yeah,
was
no,
watching
like
that,
that."
I'm going,
Yeah.
the entire way because it's, I've seen that. I've seen that. I've seen that. I've, I've done that.
So, yeah,
So,
yeah. So, yeah, I'm just that's
they will go into
oh
the
my
register
gosh.
and click the checkbox to get it from blank to C, then C to R,
Yeah.
and save it and be done. And they say, "Oh,
Oh
I've
my
reconciled," because they'll reconcile to
yeah.
each day's balance. I'm like,
Mhm.
"You got to be kidding me!"
Yeah, yeah,
So I'm undoing all that and redoing it afterward, or telling one of my juniors like, "This is how you really do a bank rec, and please
yeah,
do it the right way,
yeah,
and don't be lazy."
yeah.
And that's really what it comes down to, laziness, and
Right.
thinking that you're getting ahead when you're really making life way more difficult for someone else.
Yeah, yeah.
When a CPA or an EA, I used to be an EA. I'm going back to get it. I think I told you that story when we
Uh-huh.
met with the tax group last week.
Yeah.
But when we're looking for things that have to be done a certain way
Uh-huh.
and they're not, it's just
Right.
like, you gotta be kidding me, all this extra work I have to do. Or you send it back and say, hey, get someone who knows what they're doing and please have
Yeah,
it done right. Or
yeah,
if you want me to do it, great, it's going to cost you 5 times as much.
yeah.
So
Wow.
it's, yeah, balance sheet, balance sheet, balance sheet.
Mhm.
More to the point with balance sheet, like if the banks have to be reconciled, so does everything else.
Yeah, I was
Like
hoping you were gonna
when
touch
I
on that.
come from, I come from corporate. That was where my
Mhm.
first 10 years were. And
Yeah.
you know, I was in charge of 5 different offices nationwide, and every, not just some, every balance sheet account had to be reconciled.
Mhm.
And if there was no actual reconciliation process, you had a spreadsheet that you were keeping up with every month to
Mhm.
reconcile the bank to what, or the book balance to whatever the source document was.
Yeah.
And by the way, make sure everyone gets source documents.
Right.
Stop,
Right.
screenshots aren't good enough. I'm sorry. I
Yeah,
need,
yeah.
get me the statement. Everyone's trying to get away with, again, the laziness. Don't give me a
Mhm.
screenshot. Get me the
Mhm.
actual statement. And
Yeah.
you know what? QuickBooks and everyone else now has the ability to save that document with the rec, or to save that document
Yep.
with the transaction. So if
Yep.
you've got a loan balance that you're trying to reconcile, you can
Yep.
attach the loan statement to the rec,
Yep.
or to the transaction where you're booking the principal and interest. You can do
Yeah.
that. And
Yeah.
it's to see that not done, and go through a balance sheet when I'm like, that loan balance didn't change from last year to this year. It should have. And it's
Right.
all sitting in the interest expense. I'm like, oh,
Yeah. Oh, yeah. Yeah,
right.
okay.
Or interest revenue when you got a loan
Uh-huh.
receivable.
Uh-huh.
It's all sitting in one account. I'm like, can someone please just use some common sense and,
Yeah.
go through it and get that done? But yeah, you see that all the time too. But every balance sheet account has to be reconciled, with
Mhm.
possibly the exclusion of the equity accounts. But that brings me to another peeve that Andrew alluded to as well, that your chart of accounts has to be customized for your industry.
Mhm.
But I'll take that one step further. It has to be customized for your type of entity.
Yeah. Yeah.
If you were Schedule C, and now all of a sudden you went and you went and became an LLC,
Yep.
and then you got smart and you said, I want to be treated as an S corp.
Yep.
Well, you have to change your chart of accounts to reflect that.
Yep.
This is going to make your life easier, or it's going to make your accountant's life easier when they're saying, okay, this is an S corp. I'm doing an
Yeah.
1120 S. Where's the shareholder distributions? Where's the
Yeah.
shareholder loans?
Yeah.
Where's the contributions? Where's the dividends? Where, like all of it, you have to know
Yeah.
where it's supposed to go. And
That
have it
is, yeah, I will let the cat out of the bag just a little bit and say like that's a key thing that we're covering in the accelerator
good.
is to to make sure that you know the entity and that they understand the tax form. I mean, not to become a tax accountant, or a tax preparer,
No, but
but at least to
understanding what we
be
need.
familiar with it and understand this is what the accountant's going to do with that information. That's why it has to be categorized this way.
Right.
Now, let me ask you a question that one of my students posed about changing the chart of accounts. And that is there a concern about historical records? So if you started as a Schedule C and then you switched over, now you're an S Corp, it's going to be slightly different. Is it better to make the previous accounts inactive so that you still have them there? Or is it better to change the name of the account?
Yes. It's six of one, half dozen of the other. I'm all for preserving historical information, and
Yeah.
most accounts will tell you that too. So I would
Okay.
make, if you're going from a C to an S,
Yeah.
if you schedule C to an S,
Yeah.
then I would want to keep the equity accounts, just lock them as of whatever date you became an S corp, and then
Yeah.
make new equity accounts for shareholder distributions or
Yeah.
shareholder contributions.
Yeah.
I mean, you're gonna have to take the net equity from the last day of a Schedule C and put it into your contribution as an S corp
Hmm.
shareholder. But essentially, you still want to maintain that differential between your old thing and the new thing.
Yeah.
Here's here's what's going to make your head spin. Intuit is going to want you to create a new QBO account because they're going to say you changed your tax ID
Oh,
when
interesting.
you don't necessarily have to. So if you
Yeah,
are,
I don't know. Like I've been through that evolution and I never had to change mine. Interesting.
they're they're working on it now. They're trying to
Yeah,
get you to
yeah,
change. Even if
yeah.
you go from
Interesting.
a C to an S where you don't have to get a new tax ID
Hmm.
number.
Yeah.
Um, if you get someone who's brain dead at the IRS that,
Mm.
automatically assigns you a new number when they weren't supposed to, then you're
Hmm.
really in trouble because now you've got a new EIN that
Oh,
you
interesting.
have to
Yeah.
now change everything for.
Yeah.
Payroll, sales tax,
Right. Right.
whatever else.
Right.
And try to have Intuit listen to you with that one. I had
Yeah.
an argument with Intuit a couple weeks ago about changing, the IRS incorrectly issued a new EIN number to somebody going from a Schedule C to an S corp.
Mm-hmm.
And we filed all the right forms,
Yeah.
and they still issued a new Social Security, a new EIN anyway.
Uh-huh.
So we had to tell Intuit that we're using a new EIN number, but I forgot what the term was, but
Uh-huh.
it was a succeeding account, not a
Uh-huh.
replacing or not a
Yeah.
new account.
Uh-huh.
So we're eligible to keep the QuickBooks account and not have to create a new one. And they
Uh,
were adamant. The person we got on the phone was adamant that we had to get a new account. I'm like, no, escalate this, bring it up,
oh,
get
wow.
your
Yeah.
person above you because I'm going to show you
Yeah.
exactly what I'm talking about.
Yeah.
And
Yeah. Yeah.
so it's the IRS is gonna, if they screw up like that, they're gonna want you to do a new EIN. And if you have a new
Interesting.
EIN, Intuit's gonna want you to create a whole new set of books. Like
Hmm.
you can keep the old account if you want, but they're gonna want you to open up a new one.
Yeah.
And that's also another
Interesting.
nightmare. You can go in and change anything you want in
Uh-huh.
settings.
Yeah.
They're not gonna make you do that. But
Yeah.
um yeah, so it's when
Huh.
when clients make those changes and the bookkeepers aren't aware of what the ramifications are when those changes are made,
Hmm.
then it becomes problematic to say the least.
Yeah. Interesting. So
So
what, yeah, so some of your other beefs. We were talking about the customized chart of accounts.
yeah. Let's see. Where's the other ones here? Along with customizing the chart of accounts, like if you're doing it to the type of entity, like if you got a partnership,
Mhm.
There should be lines for guaranteed payments.
Mhm.
There should be lines for officer salary if you have an S corp,
Mhm.
separate from the staff because it has to be
Mhm.
separate on the tax return.
Right.
So knowing what the tax return looks like
Yeah.
for a Schedule C, a 1065, an 1120, an
Yep.
1120S, knowing what those look like will only help create the chart of accounts the way it needs to be.
Yep.
But then there's the other side of that. You get paralysis by analysis with some of these owners that want
Mhm.
a separate line item for every expense that comes in every month. I'm like, you can
Yeah.
group these, your workers' comp
Yeah.
insurance, yes, it should have its own line, but your
Yeah.
liability insurance, your disability
Yeah.
insurance, all these,
Yeah.
they can go into just insurance,
Yeah.
you know,
Yeah.
and they will get crazy with the level of detail that they want, and there's got to be a happy medium in there somewhere. But
Yeah.
if you can have your chart of accounts at least somewhat mirror what the tax return looks like, that only
Mhm.
makes lives easier for us.
Right.
And in
Right.
QBO, if you take the time to really set up each account the right way, you can
Mhm.
actually map it to the correct tax line in
Yeah.
QBO, so that when they import it directly into Pro Series or
Yeah.
Lacert, whichever one they're using,
Yeah.
that makes life a whole lot easier for everyone. And if you
Yeah.
get an account, there's, the CPA who's using Lacert that says, you know what, I want you to map it because I'm going to import it.
Uh-huh.
And, or if they're using ProConnect and import it,
Uh-huh.
it's a click of a button and it takes 5 minutes instead of 3 hours.
Wow.
But map have the chart of accounts at least look somewhat like the tax
Yeah.
return does.
Yeah. Yeah. That's
Um,
huge.
yeah,
That's in our very first our very first course, right out the right out the gate. That's in there.
exactly. And then finally, the last thing I had here was it goes back to when I was talking about if you have a loan, attach the document to it, attach the loan statement to
Mhm. Mhm.
the transaction. And
Mhm.
more to the point with that is every transaction should have as much detail in there as possible.
Mhm.
Don't just say, okay, include the bank feed or append to this or replace with this. Um, put as much detail in there as possible because if I get these books in September of the following year and I
Mhm.
need to ask you about a transaction in January and you're like, I don't know, I don't remember.
Right.
And the
Right.
owner's gonna be like, you're asking me about January of last year? No.
Yeah.
So if you get all that detail in there, it makes
Yeah.
it easier to remember where it came from or what it was for.
Yeah.
That's all. I mean, it, everything is common sense, and it's really if you use that, you know, as a bookkeeper, it shouldn't be that difficult,
Yeah.
even to make. As I told one of our staff members the other day, 5 minutes of work now will save us hours of work later.
Yeah.
Because right now we're still dealing with notices left and right,
Mhm.
notices from the IRS or from the states. And
Mhm.
it's mostly because of a silly mistake that was made, not tying out a number or not making sure that this is where it belongs, or something that one of the ratios was out of whack. Like if
Mhm.
you're looking at when you're looking at your books at the end of the year before you send them off to the CPA, take a look at them. Don't just trust what you did is right.
Right.
Look at it and
Right.
run the P&L for the whole year, but have each month in a column by itself.
Mhm.
So you can
Yeah.
look at trends. So you can look to see what's going on, see if
Yep.
something's missing. Was
Yep.
rent doubled in 1 month, or is it missing from December and it's
Mhm.
sitting in January somewhere because you paid it late, or January's rent is sitting in December. You've got it
Mhm.
overstated.
Yep.
Look at it to make sure that what you've done makes sense.
Yeah.
I've got a lot of restaurant clients. I've got a lot of construction clients. I know what those gross profit numbers should look like,
Mhm.
as percentage wise. And if
Yep.
they're not, what's it going to take? Do you have to go
Yeah.
back to cost of goods sales? Do you have to put some of the guys that are off the books on the books? Like, do you
Yeah.
have to make sure that these ratios match? If
Yeah.
you're in construction and your gross profit is 90% of your revenue, no,
Red
no, it's not in the
flag.
right spot. You've got
Yeah.
materials, you've got labor, you've got
Yeah.
breakage, you got everything, and your equipment.
Yeah. Yeah.
And
Yeah.
similarly with food, if your gross profit is 10% of your revenue, something's still not right.
Mhm.
go back and look to see what you've spent, or where are you coding everything? Is it going to expense, or is it going to cost, or is it going to inventory? Where is it?
Mhm.
Make sure what you're looking at makes sense before you send it off, because
Mhm.
if you do, if you do make sense of it, or at least you understand
Mhm.
why the differences are what they are, you can
Mhm.
send that off with the books to the CPA or to the EA
Mhm.
and
Mhm.
say, here they are. I know that this one looks a little weird. Here's why.
Yeah.
I know this looks
Yeah.
overstated. Here's why.
Yeah.
And if you can at least provide that explanation,
Yeah.
then you're saving us a phone call or a Zoom. You're
Yeah.
saving us aggravation of trying to hunt down for it.
Yeah.
And you're also saving yourself the embarrassment of having to be explaining yourself about it when you should have known about it to begin with.
Right.
You know,
Yeah.
the the bookkeepers, I've done it all, soup to nuts. I've been the bookkeeper,
Uh-huh.
I've been the accountant, I've been the tax preparer, I've been it all. And to know the end result,
Uh-huh.
I know now what has to start from the beginning. And I'm
Yeah.
always trying to make sure that it's caught in the beginning and going
Yeah.
forward the right way,
Yeah.
which is why
Well,
they put me in
that's
charge of the juniors at where I'm at now,
yeah.
because they know that I've had that beginning to end experience, that
Yeah.
I'm not just looking at it from one standpoint.
Yeah.
Um,
Well, that's amazing. I am so glad that you decided to be on our council because this is exactly what we are trying to, glean. Like this is exactly what we're trying to get at so that we can, as bookkeepers, address all of those problems early, early, early on. Like if you're reconciling every month and looking at the numbers every month, then come the end of the year, it should be a simple matter. Like it should be a simple thing. It shouldn't be this big, huge lift that it is so
Right.
much of the time. So,
A lot of the problem I know is with the fact that the bookkeepers being paid by their owners, excuse me, don't want to rock the boat. They don't want to get fired.
mm,
One of the things I learned early on was it's a very simple line to say when you meet a new
uh-huh,
client. I'm going to ask you a lot of questions.
uh-huh,
I don't play judge or jury. I'm just going to ask the questions.
yeah,
Give me the answers.
yeah,
I'm not judging you. I'm not
yeah,
sending you off to the IRS. I'm not sending anonymous letters saying they need to come to your house. I'm not doing
right,
that. I need to
yeah,
understand what's going on in your books.
yeah,
So if I ask you a question, don't say, "What do you need to know for?"
uh-huh, yeah,
Don't be that protective. If you want me to be doing what I need to do,
yep,
your attorney's going to keep you out of jail. I'm going to hide all the money. I'm going to know where it's supposed to go. So
yeah,
if you tell me what it's for, I can make it work the way it needs to. You
yeah,
know,
yeah,
and similar to what Andrew said, like, how do you want to see your books? What are you looking for? What is your end game? And
yeah,
that is how I'm going to run my business with you. If you want things a certain way and you are looking for a certain objective or a certain goal, then my reporting is going to reflect that. And
mm-hmm,
the work I do to get to that reporting is going to reflect that.
yeah,
So if I know where your end game is, then that only helps me along the way.
yeah,
And owners have to be less protective of what they are trying to hide everything from. And I get it.
yeah.
I had a client where blue folders were reported, red folders were not. Red folders were
Oh,
the cash
wow.
folders, and blue folders were the ones who paid by check.
Oh, wow.
Yes. I'm like,
Wow.
how come I don't see that file? Like, that's a red file. I'm like, all right, I
Oh
don't want to
gosh.
know. Leave me out of it.
Oh my gosh. Well, thank you so much for your time and your list. And we're gonna incorporate all of this stuff. We're gonna make sure that the bookkeepers know and can relieve that burden once it gets to you guys. And I know the bookkeepers, they want to learn. I mean, the ones that are in my world, like there are bookkeepers out there that are hard-headed and just are like, I am going to do it my way and screw everything else. But the ones that are in my world, the ones that are excited about the accelerator, they want to learn. They want to learn how they can be the, best partner that they can be to, be able to hand it over to you and just eliminate so much headache in the world. So I
People
really
just have to be
appreciate,
willing to learn. and be
Yeah.
willing to let themselves learn. Like
Yeah.
I was sitting, I forgot where, but I was sitting next to someone who's considerably older than me. And,
Uh-huh.
oh, I know what it was. I took the first part of the EA exam about a month
Uh-huh.
ago.
Uh-huh.
And I was sitting next to someone who was older than me, having to take a certification exam for, I think, some sort of CAD equipment.
Uh-huh.
And I'm like, he's like, oh, I hate this. I can't stand having to go to classes and do all that. I said, you should be learning something new every day,
Hmm.
and if you stop learning, you stop living. It's just, doesn't matter what age you are, you should always be wanting to learn something new.
Yeah. Yeah.
you know?
I had a mentor who used to say, when you're green, you're growing. When you're ripe, you're rotten.
Exactly. Exactly.
So, all right. Awesome. Well, thanks again so much for your time.
Thank you for
And
yours.
I will see you in the group. Keep that feedback coming.
I will. Have a good
And
holiday.
have a wonderful holiday.
Thank you, you too.
All righty.
Bye
Bye-bye.
now.